Hello guys, welcome to a new video on technical analysis explained. So, to, if you have not watched my previous videos, you can search for my channel, and here this is the playlist technical analysis explained. In this playlist, this will be the fourth video. Previous to it, I have explained what is a fair value area. Then I explained the concept of excess price. After that, I had explained what is a control price, and there are initiative and responsive trading. So that all I had explained. Continuing with the video, in this one, I will be explaining what is the rejection and what framework we will be using to identify trades. And after that, there will be trend, how to identify trends, and when there is a change in trend, then there will be support, resistance, and rejection. And after that, uh, for the next video, there will be a chapter of putting it together. And in that, I will be explaining the summary of the book that we have completed. And then from there, we will continue with the next book, that is Trading the Price Action. So before I start, let me quickly wind up the previous topics. So as we all know that uh, chart pattern is the result of supply and demand game. The way supply and demand varies for an instrument, this creates a chart. This creates several patterns on the charts. When the supply, when demand is greater than supply, the price increases. When demand is less than supply, price decreases. Yes, and when they both are in line, price won't go anywhere. It will be consolidating in an area, and this consolidation area will create a fair value. Will create a rectangular box type structure that we gave the name fair value area. After that, we learned about excess price. Sometimes what's sometimes what happens is that due to some news related news, or uh, no matter what may be the reason, price sometimes breaks that rectangular box and it comes way down or up. However, it does not stay there for long. It is swiftly brought back inside the rectangular box, and this pattern is known as excess. Price went outside the area, but it could not sustain outside it. It was quickly brought back inside, and that creates an excess price. Uh, Excess price is the footprint of big traders. Whenever a price goes to excess, suppose it goes above fair value area, what does that indicate? That big players were thinking that price is fairly valued in the rectangular box. Now, when price has moved above the rectangular box, what price is expensive? This increased price attracts whom? People who want to sell. Now they are able to sell at a higher price. It's a benefit for them. So they come in huge numbers and sell. And this increased supply brings price down into the fair value zone. So that was about the same way for when price goes down, they find it cheaper to buy, and so price is thrown back inside the box. After that, we learned about control price. So control price is a price inside fair value area where the price of instrument uh, has spent most of the time trading. Inside fair value zone also there is a price where instrument has most traded. For example, in this one, If you please follow my mouse cursor, you can see this is the rectangular box. This is fair value area. Inside this, if I draw a horizontal line here, you can see that price has touched this line most of the time. If we draw a smaller rectangular box, I think is there an option to draw and it is the document. What is it? Highlight text, move text, no. Anyways, let's just move with the cursor. Okay, this line, if we assume that this line is the price has spent most of the time at this line, and so this will be the control price. So what control price does is that when price comes from below, it acts as a resistance, and when price comes from the above, it acts as a support. See here, price was if this is the control. There is no way I can draw a horizontal line. Okay, highlight. Okay, no, it can't be. Anyways, I will show it in the chart. Better I show it in the chart. Anyways, and after that we learned about initiative and responsive trading. Initiative trading is uh, when big institutions feel that the price is not fairly valued, and they take initiative to move price out of that uh, area. This is called initiative trading. And when this initiative has been taken, counter traders try to bring the price inside the area, and that is called responsive trading. After that, we had value shifting. Uh, Value shifting is like we had drawn fair value in a horizontal sheet. All these were horizontal one. In value shifting, what happens is that the value shift FBA can be slightly tilted. Yeah, here the fair value area is not a horizontal one; it is a tilted one. See, and here the control price is a slanting price. This happens when supply and demand are not very much different. They are almost equal, but one slightly exceeds the another. For example, if it is going in a downtrend, what does this indicate? That demand was greater than, sorry, supply was greater than demand. That is why price is coming down. But price is not like, see this part. Price quickly went up. That means that means demand was very much greater at this part than supply. However, this this one from this area to here, it is coming down slowly. That means supply was greater than demand. That is why price is coming down. But it was not exceeding very much, not too much. The difference is not extreme. That is why it is not coming down swiftly. It is coming down gradually. The slow movement shows that there is slight difference, and so this creates a slanting fair value area, and that we call as value shifting. Normal behavior of prices to go up in one direction, stop, consolidate, give value to price, correct in other direction, resume in the initial direction. Okay, here, what is the normal behavior of price? Normal behavior of the price is to go in one direction. After it has moved a certain distance in one direction, it then stops, consolidates, accumulate, accumulates traders, and then after that, depending on the scenario, it will either resume in the previous trend or it may move in the other direction. That is called reverse. Okay, most of the trading and lots of blank space below it. Okay, so here it is now in value shifting. There are subtle signs, very minute signs that we can look for. For example, here it is said in this part you can see this one. Okay, what happens is that this was a fair value area. Total was a fair value area. However, in this part we can see that it has found another smaller area. Price is uh, trading inside value high and control price. Between these two, it is oscillating. That means it is oscillating in the upper end. What does that indicate? That indicates that demand is that buyers are willing to buy at higher price. When price comes to control price, they start buying, and so price is not going to value low. And this is a strong uptrend. See, most of the trading activity above control price and lots of blank space below it. This one, this is blank space. Most of the trading is in the upper part. That means it is an uptrend. So if in an uptrend, trading activity mostly happens below control price, shows that uptrend is about to terminate. So this was an uptrend. In uptrend, trading activity uh, started accumulating below control price. This one. So what does this indicate? This indicates that now buyers are not willing to buy aggressively. Also sellers are selling aggressively. That is why sellers are not waiting for price to reach value high. They start selling once control price is achieved. And so we can say that sellers are now getting heavier. They are starting to dominate buyers, and when sellers start to dominate buyers, what happens? Price will come down. Okay, let me see how long is video. Okay, it's already 12 minutes. So I think that was enough for this video. We had a quick recap of previous topic, and what we learned today was value shifting. Now let me quickly wrap up something if I can see on the chart. Yes, here on the chart this is XAU USD, that is gold in terms of US dollar. This is recent chart. This is hourly chart. We can see that. Let me draw. Okay, parallel channel. If I draw a parallel channel, can I draw it? I think I can. Okay, this one and yeah, let's draw this. Yes, yeah, that's perfect. See here, uh, price traded most of the time here. Let me uh, hide this 200 year EMA. This is causing a bit distraction. Okay, now see. Let me expand a bit more. Oh, okay, this is quite a long uptrend. See, this uptrend, when did it start? Even I don't know. See, it is a quite a long uptrend. So let me zoom out more. Yeah, okay, this is the uptrend. So can I increase the distance for both upper and I can't increase it separately. Okay, so you can see that in the zoomed out chart. Let me. This is a small fair value zone. Why is this horizontal one? What date it is? 25th January. Okay, that was anything. Some trade taken anyways. Let's move it. Okay, so this, as you can see, the parallel channel slightly tilted parallel channel. This is shifted fair value area. Fair price traded most of the time in this parallel channel, and so mm, we can call this as shifted value shifting. This is the middle. This is center part. Um, it doesn't. It is not necessary for control price to be uh, midway of the channel, both lines. It can be slightly up or slightly down also. That depends on the situation. But here, I think this mid channel is quite good. It is taking up all the price. Okay, we have already 15 minutes. Okay, let me quickly wrap up. Okay, so as we can see that from here price uptrend is started here. So what happens is that price stayed in the upper zone. Here it breached control price, but it could not touch the lower value. Okay, here once it touched the lower value, it quickly regained up, and see here control price. This is acting as a resistance. When price came from value low, this control price acted as a resistance. Here also resistance, here also resistance, and see. 1, 2, 3. Almost 3 times it acted as a resistance. Then it was able to breach up. Once it breached, it went near value high here. While coming down, this control price, which was earlier acting as a resistance in this area, now it is acting as support. Why? Because price is coming from up. When price comes from up, it acts as a support, and when price comes from down, it acts as a resistance. Okay, so this here 2, 3 times. Let me zoom in more. So here it acted as a support. Now here it breached. See, this we can call as rejection. If we draw, okay, so rejection we have not studied now. So, okay, if we can cover this, uh, there is no trading. Okay, we can this resistance. Okay, this is also a fair value. So this is called rejection. Anyways, we are not rejection is for the next video. Okay, so it acted as a support since price was coming from value high, and here see it now breached the control price. Now it came down. It traded below the it traded below control price, and now see here it is acting as a resistance. So next what we learned, in an uptrend, this is an uptrend. What price is trading below control price, and upside we have a huge gap. What does this indicate? This indicates that this uptrend is likely to uh, uh, this uptrend is likely in danger. The uptrend is likely in danger. And we can also see that this is acting as a stiff support. So once this is broken, and so we can see that price has already what we call it has mm, stopped moving in uptrend. The uptrend has stopped. See, we can see that it is now consolidating a bit. Okay, so we will have to see what happens in the next week. So this is gold chart. This was last day expiry, Friday, and since today is Saturday and tomorrow is Sunday, forex market will be closed. So let's see what happens these days. I think the video is getting long. I have covered enough topics. So that was all for this video. Thank you for watching this video. Have a nice day, guys. See you in the next video.